things you can add to the list, like the Tesla van, which was something he talked about a long time ago.
We were showing hey Sean, we were showing video for our YouTube users, and so the silver truck or whatever that he was getting into,
Cybertruck.
Is that the Cybertruck? That's it, right?
Mm-hmm. Yeah, and that was the first time that we've ever seen, at least that we know of, the two prototypes that they have working of the Cybertruck in the same place. And so, yeah, that was something that a lot of people there were really excited to see.
Okay, how big of a grain of salt should we take these dates, Sean? Because I got to tell you,
party pooper.
Well, look, I hear Tesla robotaxi, right? And I think back to when Elon Musk promised we'd be seeing these on the roads back in 2019.
You come up with a roadster, okay?
Well, here we are, 3 years later, no robotaxis, and then at the same time, the Cybertruck and the Semi were, those were supposed to be in production already.
I mean, I think you're right in thinking that there should be grains of salt taken with some of this stuff. As a writer myself, I know I have trouble with deadlines, so I can't completely fault.
But you still got this piece in last night.
Yes, though with help, for sure. And Elon's definitely someone who likes to go it alone, at least at the top level of the company a lot of times. So yeah, I mean, I think we should view any date that he sets, whether it's Tesla or any of the other companies that he runs, with huge skepticism. It doesn't mean that they aren't working on these things. They are just sort of, Tesla's problem and Elon's problem really has always been he's never really willing to fully accept or understand the challenges that he's sort of put in front of him, because he's been able to accomplish some pretty wild things. But I think he thinks at the outset of some of these projects that he's going to be able to make those sort of breakthrough moves along the way that he typically stumbles his way into or designs his way into, and sometimes those are a little bit harder to come by than I think he expects.
I think it was back, I was just checking, I was doing a quick Google search, I think it was back in 2018. We used to keep track of Elon's forecasts, deadlines, schedules, because it was constantly, Sean, so fluid. And that's just kind of who he is. But it's interesting how investors have kind of gotten used to it, because if we look at what he's done, he ultimately does seem to deliver. Can you just tell us about the drones flying in the night sky? Did you get to see that?
Yeah, that was pretty cool. I mean, we've seen this. A lot of tech companies and stuff have started doing this and sporting events and everything, but it was nice to see them sort of go through sort of the design work and put in the thought to come up with really kind of clever or funny things to show in this drone show. We saw like a portrait of Nikola Tesla. We saw the Shiba Inu that is sort of emblematic of Dogecoin. We even saw a little, the meme that kind of shows up at the end of the ordering process when you buy a Tesla, this little hedgehog that is throwing up the little OK symbol. So it was, it was a very considerate as far as, things within the realm of Tesla. And people who follow the world closely that surrounds this business. It was a very considerate thing for all those people to see. It was something else.
The humanoid robot, though, didn't make it, just quickly?
It was there, but it is still very much a just department store mannequin propped up on a stage. It is not something that is working. So we'll see. That one might need a little bit more salt than some of the others.
Looking forward to that timeline coming true. Sean O'Kane, thank you so much. Really fun. EV reporter at Bloomberg News via Zoom from Austin, Texas.
Let's go from Austin to Washington, D.C. for an update with Nancy Lyons. Hey, Nance.
Thanks, Tim. The first all-private human spaceflight mission is on its way to the International Space Station, carrying a crew of 4.
3, 2, 1, 0. Ignition. Stop. Go Falcon. Go Dragon. Godspeed. Axiom 1.
This trip is the first by Axiom Space, a Houston-based startup that plans to assemble a private space station starting in 2024. A special celebration at the White House today for newly confirmed Supreme Court nominee Ketanji Brown Jackson.
I strongly believe that this is a moment in which all Americans can take great pride.
Now that President Biden has gotten his first Supreme Court nominee confirmed, he may want to turn his attention back to the rest of the federal bench.
President Biden moved quickly to fill open court seats in his first year in office, but since Justice Stephen Breyer announced his retirement plans in late January, the president's put forward only one nominee, and there are 19 open circuit court seats. George Washington University law professor John Collins tells Bloomberg Government the president's close to losing valuable time if he doesn't put more nominees forward soon. Republican Senator Lindsey Graham has hinted it could be a slow process for the president if the GOP takes over the Senate Judiciary Committee next year. In Washington, I'm Nathan Hager, Bloomberg Radio.
In baseball, the Yankees and the Red Sox are tied at 3 apiece. And at the Masters, Sungjae Im and Danny Willett share the lead at 4 under par. Tiger Woods is 1 over and tied for 26th. You can stay tuned to Bloomberg for hourly golf updates. A special wrap-up of the day's action is tonight at 11 p.m. Eastern here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nancy, thank you so much. Carol Massar, Tim Stanovic. It is Friday. We are here in our Bloomberg Interactive Broker studio at Bloomberg headquarters in New York. NFL Broncos.
Yeah, Rob Walton, the eldest son of Walmart founder Sam Walton, is planning a bid for the NFL's Denver Broncos. That's according to people familiar with the process. How much is it going to cost, Carol?
I don't know.
Billions.
Billions. You know, there's been a lot of reporting expecting that this could be, you know, I think the most ever paid for an NFL team.
It could go for $4 billion or more. But he's got the money. He's a former chairman of the world's largest retailer. He's 77 years old. He's the 17th richest person on planet Earth. He's got a net worth of about $69 billion. That's according to the Bloomberg Billionaires Index.
It's interesting, too, because it's not kind of a typical play for the Walton family, according to our reporting and our coverage, certainly here. It would be, if they buy the NFL team, it would be an unusually high-profile purchase for one of the Waltons, whose family has historically avoided flashy assets in keeping with their patriarch, Sam Walton, his legendary thrift. The family's vast fortune, estimated at more than $230 billion, is increasingly showing up, though, in investments in stocks, private equity, and hedge funds. I remember one of the major networks did a piece, and I think it was on one of the daughters and, you know, her philanthropy and art and so on and so forth. But I was kind of surprised because you don't see a lot of coverage or pieces on the individuals in terms of any kind of spending. And, you know, it's just very quiet.
Yeah, it'll be fascinating to see if it ends up going through. He does, though, join a crowded field if he proceeds with this. It potentially includes Clear Lake Capital co-founders. He's got Josh Harris, the co-founder of Apollo Global Management, is considering his options. Alec Gores, Dean Metropoulos, and Matt Ishbia are also exploring an offer. That's according to people familiar with the situation.
And media mogul Byron Allen is the only person to publicly declare he's getting ready to make a bid for the Broncos. They did go up for sale in February, and an investor group led by Allen could pay $3 to $4 billion. Bloomberg News, we've reported that out. And if successful, this is a big deal. It would make him the first black majority owner of an NFL team. This is something we have not seen, and the league has been certainly criticized for. So anyway, that story on the Bloomberg. Carol Massar, Tim Stanovic. We are Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Turns out to be a mixed Friday right now, on track for a losing week for the S&P. Lower now by 3 points, little change, down less than 0.1%. The Dow holding on to a 180-point gain now, up 0.5. NASDAQ lower by 147, down now by just about 1%. The 10-year yield, 2.72%. The 2-year yield, 2.51%. Spot gold is up 0.5%, 19.42 the ounce, while West Texas Intermediate crude is up 2.2%, 98.18 a barrel. Markets are wrapping up the week on a moderate note. Equities paring back gains. The Treasury curve continues to steepen following declines sparked by the Fed's plan for aggressive monetary policy tightening. Bottom line here, we've got the S&P little change, down now by 2 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you so much. Well, the new issue of Bloomberg Business Week, it is out. It's online at businessweek.com, bloomberg.com, also on the Bloomberg terminal, and it's on newsstands.
Joel Weber is editor at Bloomberg Business Week. He joins us via the access line from Brooklyn. You can follow him on Twitter at Joel Weber Show. Joel, I got in my hands the current issue of Bloomberg Business Week magazine. I want to start with the cover, and then we're going to get to the cover story. But one of my favorite parts about Business Week each week is talking to you about how the cover is made, or even just finding out how the cover is made, flipping it open to the table of contents and reading that. Take us through how this one came together.
So this cover story is by Joshua Green, and it's about David McCormick, who until earlier this year is actually CEO of Bridgewater, the world's largest hedge fund. He is now a candidate for the GOP Senate position, a seat in Pennsylvania, and that primary is unfolding now. The primary election is next month, and he's in a heated race with Dr. Oz. So the story really focuses on McCormick and sort of his transformation from being a hedge fund finance type into a Trump-loving MAGA politician. And to do that, we really wanted to, show what he was like, the environments that he's now at with his rallies. And we just had this amazing photo that we got of him sort of cackling, and it was just the perfect image to go with a line, the dominant part of which is, full MAGA.
I said to Tim, this is a guy who is on a mission. It looks like, will kind of do whatever he needs to do or be whoever he needs to be to get to his ultimate goal.
Yeah, and I think, John, it's not like the Republican side of his politics is a surprise. I mean, he's long been known to be a Republican and has, as Josh writes in the story, like potentially grander ambitions than just this Senate seat. But it has taken his Bridgewater colleagues a little bit by surprise just how full MAGA he's gone. And it also speaks, as Josh writes in the story, to what it takes to actually really be a successful Republican at this stage. And for a while post-Trump, there was maybe a theory that you would be able to see more centrist candidates. And it turns out that even somebody like McCormick, who probably in a non-Trump world would have been a centrist, has to tack. And now, he and Dr. Oz are effectively trying to out-Trump one another, and all to basically get Trump's blessing. And if either of them happens to get the blessing, it might be enough to put him over the top.
Well, I do want to give a shout out to not just Josh, who wrote the story, but also to our Editors Roundtable discussion. That's part of our Bloomberg Business Week weekend show, which drops tomorrow, because we do talk a lot about the story, Joel, but one area that we didn't get to hit with Josh was China connections for David McCormick. And I thought this was a really interesting part of the piece, because if we think about what the Trump administration's tone toward China and where we are when it comes to Republicans in China, what he did at Bridgewater, many would argue, does not really gel with that.
Yeah, and there's a very memorable scene with Josh and Dr. Oz in a bathroom, actually, where Josh got to interview Dr. Oz, and basically Dr. Oz at that moment said as much to Josh, that he was surprised that more people haven't been frustrated with McCormick on that on the China score, because you're right, Bridgewater famously has been very sympathetic to China, has courted Chinese dollars, has made a ton of money there, and a lot of that happened on McCormick's watch as CEO. So what McCormick on that on the China score, because you're right, Bridgewater famously has been very sympathetic to China, has courted Chinese dollars, has made a ton of money there, and a lot of that happened on McCormick's watch as CEO. So what he's also pushed back on that and said it's only a fraction of the business, and wasn't directly something that he oversaw. But the fact of the matter is, if in the political world in which we look at now, everything looks like it could be weaponized, and that looks like something that may continue to be used against them, either in this race and races to come.
All right, so that's the domestic cover story. We also had a chance to catch up this week with you and Sarah Fryer on the international cover story, which has to do with the French elections.
Yeah, so we that McCormick story is interesting because I forgot to mention that it's the most expensive primary in Senate history, but it also just shows how this idea that I think transfixed the U.S. the last election cycles of how misinformation can be weaponized and how rife it is on social media. Mm-hmm. And we've spent a lot of time talking about the social media companies and the platforms and what they're doing to fight misinformation. And it turns out that a lot of these problems are still festering. And France, which has an election on Sunday, happens to be a surprising case study in just how wrong it all still looks. The far right candidates there, Marine Le Pen, Eric Zemmour, have managed to basically get Emmanuel Macron to have to veer more towards their lane. The race, which I think a lot of people had probably thought Macron would probably be able to walk away with, looks really tight, and it will basically lead to a runoff. And even in that runoff, it looks like currently, like some of the numbers suggest, that Le Pen could have the edge. And it all comes down to basically what Sarah Fryer and company write in this story, is that the Zemmour tactics really brought racial grievances to the forefront. A country that's already obsessed with nationalism has become a weapon there. And a lot of the same echo chamber of misinformation the Zemmour campaign is used to great advantage.
Well, let's go to another story featured in Bloomberg Business Week this week. This one by Mark Gurman, and it's about Apple workers are pushing back on their return to office almost 2 years after they were first sent home. So Monday marks the day that Apple employees are set to return to the office. Are they just willingly going to come back to the office?
Oh man, it's a story that I'm really interested in, because even the world's most valuable company, on Apple, is struggling to get its employees to come back to the office. And the Gurman story opens with this reference to a promotional video titled "Escape from the Office" that Apple published recently, and it's basically about how a group of heroes in this ad working for this fictitious company basically get Apple devices and can start their own company. And boy, the irony there is just that if I can use a bunch of Apple devices to start my own company, like why do I have to work from an office for Apple? And that is exactly what Apple is wrestling with. It's not alone. A lot of corporate America is wrestling with this same thing. And they're having to come up with some accommodative policies, because maybe execs need to be in the office, but others not so much. So all of that leads to sort of like, even the most fabulous wealthy companies in the world ranks want to deal with our.
Talk about tensions, man. Great issue, and so fun to check in with you on the phone.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And this is Countdown to the Close. Just 60 minutes left in your trading session, your trading week. Caroline Hyde, Romaine Bostick, Katie Greifeld, joined now by our colleagues Carol Massa, Tim Stenovic, as we welcome cross-audience and platforms, TV, radio, YouTube, to really discuss what is a completely flat S&P.
Yeah, I heard our Kriti Gupta describe the market today as kind of boring. So having said that, I'm just going to say, just crossing on Twitter, the Academy Board of Governors banning Will Smith from the Oscars and all Academy events for 10 years. I bring it up because Twitter happens to be the best performing stock in the S&P 500 this week, down 3 days in a row, the last 3, but it is up about 17.5% for the week overall, making it the top performer. We know the reasons why, Elon Musk and all that good stuff.
Yeah, we can call it the
Did
Elon
Elon
Musk.
slap somebody lately?
Slap?
Romaine. I don't know how to follow that.
Too soon?
Semiconductors.
Wow.
Semiconductors are under pressure today. Let's take a look at the
All the
stocks
clutching
right
around
now. It's down today, underperforming broader stocks yet again today. It's actually been a really rough week for the stocks and semiconductors, down more than 2% right now. Today's move lower is after Truist Securities lowered its price target across its semi coverage. The concern for William Stein at Truist is that he's seeing evidence of order cuts, what he calls the first negative semi-order data points in a long time. So we've talked a lot about inflationary pressure when it comes to semis and supply chains. So interesting to see those negative data points coming out of Truist.
Meanwhile, I mean, the inflation story just bleak when you're looking at the food side of the equation as well. That's one that we've been deep diving into across the board. It feels like it's a never-ending story of inflation, apart from in the price of stocks right now, because we're currently flat on the S&P. We're actually down on the week by some 0.6%. Oh, actually, that's my month to date, so I should change that to be my 5-day. And actually, the S&P is off by almost a percentage point over the last 5 days. We're at 4,501.
Are you already looking at month to date? We're only 8 days
Yeah,
into the month.
I'm wishing away time, hey?
Wow.
So much has happened already.
have a
And Will
vacation
Smith's
coming
been
up.
banned, and Meanwhile, the Dow Jones Industrial Average up by 0.6%. We're actually sort of really outperforming on the Dow at the moment, although volumes are currently lower. The Nasdaq just cannot manage to support itself when we've got these yields ever higher. We're down by 3.5% on the week. We're down by 1% on the day, and the Russell 2000 off by just 0.1% today, Katie.
And the reason why the S&P 500 is flat right now is if you look on the sector level, energy stocks ripping higher, up almost 2.8%. Technology, though, that makes up, the bulk of the index. I think it's the biggest sector. It's down 1%, 1.1%, getting slapped around a little bit there. Again, as Caroline mentioned,
Did you say slapped?
I
Nicely
did. I wanted to do a little
done,
callback, and I got there.
Nice job, Katie.
Thank you.
Yeah, you're really growing into this position here. We talk about tech stocks, so let's take a look at Apple. I mean, those shares down again about 1% here on the day, setting up for a second straight week of losses and now touching some of those shorter-term moving averages, something to really keep an eye on here. Camped out right around 170. Bank of America, which I've been ragging on all week, coming off a 9-day losing streak, which was his longest losing streak going back to 2009, finally getting the bid here, up about 1% here on the day. This, of course, ahead of the big bank earnings starting next week. Bank of America is going to be the week following that. Those shares camped out just under 40. Target shares higher here, up for a 5th straight day. Gordon Haskett actually upgrading. Interesting, talking about sort of a trend in foot traffic for Target that the analyst there actually says is different from, I guess, what some of its peers are experiencing. And then while we had that upgrade on Target, there was an interesting downgrade put out today by the folks over at Bank of America. Downgrading a lot of transport names, including Union Pacific and UPS. Some concern here about freight markets and some of the signals coming out of that may suggest some softer economic conditions.
I like that you were talking about Bank of America and indeed the all-important earnings season that is almost upon us, because overall we are actually seeing very mixed pictures when it comes to what analysts think will occur for this earnings season. In the city, global earnings revisions, they're actually turning negative. So that's on the downward trajectory, a negative price sentiment there. But on the upside, we've actually seen, well, what positive analyst earnings revisions so far this year. You've seen even stronger, surprisingly, over in Europe. And John Authers has a great piece today just saying what you're expecting from earnings won't happen. And overall, he's saying how remarkable it is that perhaps on the S&P 500 at least, we are seeing earnings revisions to the higher side.
Yeah, I kind of want to get him together with Gina Martin-Adams because she's been certainly watching those numbers. Hey, we are watching so many different things, and among the things I like to keep an eye on is the most read stories on the Bloomberg, and one about Goldman's chief economist Jan Hatzius. He caught up with our TV team earlier today talking about rates, talking about inflation, and he's a little worried about what might happen to the economy and economic growth. Here's what he had to say.
We're expecting a slowdown from 5.5% growth last year to just under 2% this year if we look at it on a fourth quarter to fourth quarter basis. The Fed will be pushing on because the labor market is overheated and inflation is too high. So I would say that the reason, one very important part of the reason why growth is going to be slower is that the Fed is trying to slow things down.
All right, that's Jan Hatzius, of course, the chief economist over at Goldman Sachs. What's interesting, and too, we were just talking about John Authors in terms of earnings estimates, right? Yeah. Romain, if growth slows down, what does that do to the earning trajectory of companies, which will ultimately feed into what happens on the stock market?
It'll be interesting, and I'm glad you bring up Gina Martin Adams because she's been relatively bullish, or at least maybe not bullish, but at least saying that these companies will find some resiliency. But to Hatzius' point, I think it's interesting because this could kind of become kind of a weird feedback loop as the Fed does try to tighten. And not only do you have a market pricing in a more aggressive Fed with regards to sort of the number of hikes that we get overall, but you now got people kind of looking at kind of 50-50-50 here over the next few meetings here, and you wonder if that does end up having a material impact on investor sentiment, and then on consumer sentiment, and whether that feeds then into the earnings picture.
Well, Hatzius is also saying that he wants to see the Fed hike rates past 4%. Do you guys know the last time that the Fed funds rate was at 4%?
I'd love to know.
It was like 2009.
Wow.
Years ago.
Wow.
Something happened during then.
Yeah, I know. Yeah, it did.
I
but it's so far from where the dot plot actually shows Fed officials expecting rates to be.
Well, we were just talking about the Taylor rule. If you look at the Taylor rule, shouldn't rates be at 10% or something? I mean, is there any appetite among the current FOMC makeup to go there, or even to 4.5%? It doesn't seem like it.
I mean, Hatzius is, to be fair to him, is saying it may need to raise to the 4% if indeed we do get an overheated, he sees it can't rein in an overheated U.S. economy. What's interesting though is also on the flip side of that, when you've got rates going potentially up to that sort of level, why then is Barclays coming out and saying by the long end, by U.S. Treasuries in the 10-year at the moment, they see yields falling back lower.
By the dip.
That was
a two-way market.
That was an interesting call, and when you look at what Hatzius was saying too, and to be fair with what you just said, Caroline, I mean that was not his base case of 4%. He just said that's certainly potentially in the cards. Though I am curious though about this idea that the Fed has basically made it kind of clear that they are targeting financial markets. They've pretty much been explicit about that, tightening financial conditions, trying to sort of rein in the markets as a way to sort of threading this needle where I guess maybe you can create some pain in the markets without necessarily damaging the broader economy.
There was a really nice piece, actually, Tim, on MLive, for example, talking exactly about how basically it's the tech sector that takes the hit because the Federal Reserve's also trying to target housing at the moment.
I would certainly see that's where the volatility has been, at least in tech stocks in recent weeks.
All right. We're not done. So we're going to be back in less than an hour's time. We're going to continue this conversation.
That's a big promise, Carol.
Well, I'm going to be here. I don't know where you're going to be.
Big if true, as Romain was saying.
All right, radio, TV, and YouTube. We will count you down to the closing bell. Wrap up the week and the trading day right here on Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So it's interesting when we talk with our TV colleagues and we track, this Jan Hatzius story among the most read on the Bloomberg. And every day it feels like you have people coming out weighing on in terms of what they think the Fed may or may not do. I guess I would point out that so many people missed the call in inflation and the run-up, or the severity or the duration of the extreme inflation. Many people did. And I do think that many would argue it's going to be it's very hard to make, I think, some of these calls, and I think it is for the Fed. And I think we're silly if we think just because people are ratcheting up their inflation calls or ratcheting up their expectations for Fed calls, it will be meeting to meeting to meeting.
It will, but what I do like about these write-ups that we see each and every day is the folks behind them are making their cases as to why the Fed may need to do these things or why they certainly believe these things. And that's what makes a market.
Absolutely. And that plays into the sentiment of the market. And that's where some of that can certainly play out. But I just, we're coming out of a pandemic. We're not done, right? We're talking about people coming down with it again. We're seeing some people come back to work, some people not come back to work. So we haven't gotten to a point where there's a pure, what's our new economy going forward post-pandemic?
Is it just us taking 4 or 5 days off when we get COVID and then coming back to work?
I don't know. you and I, we can get COVID and be home and still work from home.
Yeah, that's true.
All right, we're going to get back to world and national news. Lots to come still here on Bloomberg. Let's get, though, to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. President Biden today brought members of Congress as well as the friends and family of Ketanji Brown Jackson to the White House to celebrate her confirmation to the U.S. Supreme Court.
The president was able to stage the ceremony on the South Lawn.
This is not only a sunny day, this is going to let so much sun shine on so many young women, so many young black women, so many minorities, that it's real.
It has taken 232 years and 115 prior appointments for a black woman to be selected to serve on the Supreme Court of the United States. But we've made it.
Judge Jackson restated her commitment to her faith, the Constitution, and the rule of law. In Washington, Irv Chapman, Bloomberg Radio.
Actor Will Smith is facing additional restrictions following the slap of Chris Rock at the Oscars. He will now be banned from the Oscars and other Film Academy events for 10 years due to the incident. After 5 days of deliberations, a federal court jury in Grand Rapids has acquitted 2 of the 4 defendants accused of plotting to kidnap Michigan Governor Gretchen Whitmer. Jurors were not able to agree on a verdict for the other 2 men. In baseball, the Red Sox lead the Yankees 4-3 in the 6th, and at the Masters, there is a 3-way tie between Charles Schwartzel, Sungjae Im, and Danny Willett at 3 under par. Tiger Woods is 3 over and tied for 40th. Stay tuned to Bloomberg for hourly golf updates and a special wrap-up of the day's action tonight at 11 Eastern here on Bloomberg Radio. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Carol Masser along with Tim Stenovic right here on Bloomberg Radio. So we've been covering the Masters here at Bloomberg Radio, big tournament, and we know that Tiger Woods is back playing.
Yeah, this story.
I've been kind of obsessed a little bit.
Well, this story came to my attention because we not just love to cover golf here, but also, of course, the numbers behind some of these things
Business
when it comes to sports. Exactly. We just talked about potential over $4 billion for the Broncos. Tiger Woods, though, his career earnings hitting at $1.7 billion. This story catching our attention. It's from Sportico, which is available on the Bloomberg terminal.
So Earl Woods, his dad, told Sports Illustrated about his then 20-year-old son in 1996. This is what he said: "Tiger will do more than any other man in history to change the course of humanity." And he went on to say, in 1996, "I don't know exactly what form this will take, but he is the chosen one. He'll have the power to impact nations, not people, nations. The world is just getting a taste of his power." I almost feel like, having watched the movie on Venus and Serena Williams, just what their father did in creating these incredible players, best of all time.
Well, a lot of earnings for athletes, of course, comes not just from prize money for winning tournaments or winning games or salaries, depending on what they're playing, but off the court, and it's no exception for Tiger Woods. He's earned an estimated $1.7 billion since he turned pro. 90% of that off the course from endorsements, appearances, and also getting paid to design golf courses. This according to Sportico. The total is more than $2 billion adjusted for inflation and second all-time among athletes, behind only Michael Jordan. His $121 million in career prize money is 26% ahead of number 2, Phil Mickelson.
You saw that too with Arnold Palmer, Jack Nicholson.
With the golf design.
They all got involved, Jack Nicholson, I should say, all got involved in terms of designing golf courses. The total is more than $2 billion adjusted for inflation and second all-time among athletes, behind only Michael Jordan. His $121 million in career prize money is 26% ahead of number 2, Phil Mickelson.
Incredible brands that they've built.
Yeah, I mean, you just see all the brands have always lined up to be with him. You're listening to Bloomberg.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story out of Moscow. Russia has ordered the closing of the Human Rights Watch and Amnesty International offices in the country. 43 minutes to go ahead of the closing bell. With the Dow, the S&P higher, NASDAQ on the minus side. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed right now, with the Dow currently higher by 237 points. S&P's gained 6, while NASDAQ is down by 115. The U.S. 10-year yield at 2.72%. Gold is up 10. Oil is also climbing, but Bitcoin is down by 1.3%. Among the main 11 S&P sectors, leaders were energy, financials, and healthcare. Tech was under pressure. And leaders to the upside in the Dow, Home Depot, and Goldman Sachs, while Boeing led to the downside. In other news, Elon Musk said that Tesla might have to get into the mining of lithium, and the U.S. Treasury 30-year yield topped 2.75%. That's the highest since May of 2019. Wrapping things up, Coca-Cola traded to an all-time high. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg type squawk. SQUAWK on your terminal line. Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we talked about this. It was the most read story on the Bloomberg when it crossed. It was about the billionaire entrepreneur Peter Thiel calling Warren Buffett, Jamie Dimon, Larry Fink members of a finance gerontocracy opposed to a revolutionary youth movement that embraces Bitcoin. That was in Thiel's keynote speech at the Bitcoin 2022 conference in Miami yesterday. It's been underway. Everybody's been talking about it.
It's been underway. I would say it's been taking Miami by storm. Somebody who we're lucky to have in Miami right now is Mike McGlone. He's senior commodity strategist. He covers gold. He covers Bitcoin. And he spent quite a bit of time at Bitcoin 2022. He's with Bloomberg Intelligence. He joins us on the phone from our Miami bureau. Mike, how are you?
I'm good, Tim, and I think the way I describe it, I'm the one who's lucky to have moved here.
Yeah, you're not just there. I should know you have moved there, but we're not lucky because you're no longer up here with us, and we love having you here with us in New York, Mike. But what was Bitcoin? What has Bitcoin 2022 been like?
Well, I like the way you start off with what Mr. Thiel said. I deliberately avoid the main speakers because that hits the mainstream. It's live stream. Everybody gets it. The information is going to the exhibits and talking to all the people who are showing their stuff. And my main takeaway is this industry now has got so many tentacles over the space. I met with miners and accountants and lawyers and consultants and energy companies. One particular energy company I was really impressed with is now providing, they're harnessing the gas flaring. That's solving that problem of gas flaring from stranded oil wells and natural gas. And they're converting that to, for mining Bitcoin and other cryptos. And it's a unique, there's just so many related businesses. So my takeaway is this is such an integral part of our economy now. It's starting to increase. And it's just a question. I don't know what stalls it. Something might stall it, but it's just, it's significant as there's financial sectors, there's energy sectors. Now there's crypto, and it's just part of the mainstream economy.
Hey, so octopus can regrow lost arms. In other words, they can lose a tentacle. I feel like there are so many tentacles out there. It's hard to keep track, and I'm wondering which ones go away, which ones really matter. But are we just in that kind of, man, we're going to throw a lot of money at a lot of stuff because we're just quite not sure where it all goes?
Well, it's a good question. There is a lot of enthusiasm and passion for anything that's alternative to normal investing, normal stock market. And that's my sense is I get the sense from institutions, there's that kind of general bid below in cryptos and Bitcoin and Ethereum, the main ones. And then there's those 18,000 speculation ones. And then there's a bit of an offer above in the stock market.
Did you say 18,000, Mike?
It's almost 19,000 now.
It's so funny. Last time we spoke about this, it was at 13,000.
Exactly. It basically doubles every year, and that's a key problem in the macro. Pure economics, you just don't have good price advancement when you have unlimited supply and ease of entry. So that's the space, massive speculation, things like Doge and Shiba, and then there's this solid business case where people say, okay, well, I had on Tuesday we had an event where I had the honor of interviewing Michael Saylor, and he was actually a speaker, and he just points out that it costs nothing to store this. The world's going digital. This is an asset you probably have to have some of just in case. And he's putting his money where his mouth is.
He's got more than just some of it, though, right?
Oh yeah, he's a big holder. MicroStrategy, his company actually had a story this week. Well, the amount of Bitcoin they own is now greater than the market cap of his actual company, which means it's basically quasi ETF, a good way to get exposure to Bitcoin. Which of course he's selling his position a little bit. But the key takeaway from the conference is there's also the Miami Bull was there, which is kind of a new thing for.
Yeah, we were showing that on our YouTube channel. If you're watching there.
Yeah, and so it's also a good sign of there's a major amount of migration of the old guard Wall Street coming down towards Miami. It's business friendly and lower taxes.
All right. So as you walk around, what's going on, what are you looking for? Like, who is it that you want to make sure you talk to or get an understanding of what this company or this person or what have you is doing?
Well, Carol, I appreciate that question because I deliberately focus on all the businesses that are not what you see every day, like the miners and the traders and the speculators. The businesses are related, the consultants, the investors, the accountants. I met with a great accountant and said, hey, we provide accounting. There's legal advice and anything related to it. I was really struck by some of the energy things. There's one there for you can take an airplane up and go weightless and stuff. I'm like, why are you guys here? We accept Bitcoin for payment.
We spoke to those guys in February, Carol.
Did we?
At the Power Players Summit.
Oh, yes.
They have the plane that travels around.
That's right.
Yeah. So it's so much part of the economy now. Like there's a group there with real estate. So we accept Bitcoin for payment. I'm like, okay, well, there's just so many. It's so much integral in the economy now versus a few years ago. It was just some geeks who was trading on there, and who knew about it. Now it's just such part of the mainstream.
Okay, but does it actually feel like it's away from the fringe and has mainstream adoption? Because you can go to one of these conferences and feel like this is the whole world.
Yes, well, that's the key thing about last year was kind of the coming out. It was like a Woodstock event. This year was at least double the amount of people, double the capacity, double the enthusiasm. And my sense, it's more of a rational crowd because I met a lot of investors and hedge funds and things. Yeah, we hold Bitcoin, we hedge, we earn income, and we have a decent amount of seed investors who are happy with their returns. And a lot of it's money's people are looking for alternatives and going away from equities and going, okay, we have to have some of this cryptos in our space.
Well, great to be able to check in with you and find out what you're hearing and seeing on the ground. Mike McGlone, thank you so much. Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence, on the phone from our Miami bureau.
Zero G. That was the company. Thank you, Ari.
Matt Goen?
Yeah, Matt Goen. Yeah, it's Zero G.
Yeah.
I'm still waiting to do that.
I'm still waiting to see how it all shakes out. All right, you're listening to Bloomberg Chart of the Day coming up in just a moment.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic live in our Bloomberg Interactive Broker Studio. Coming up, the chart of the day.
Yeah, this one about food and crisis. Kriti Gupta is going to be joining us in just a second. First, though, let's get a check of the trading day. Here's Charlie Pellet.
We're looking at a mixed market right now. We have the Dow Jones Industrial Average higher, S&P also higher. NASDAQ is on the minus side. 28 minutes to go ahead of the closing bell with the S&P up 2 points right now. Little change there. We've got the Dow up 229, up 0.7%, and NASDAQ down 137, a drop there of 1%. The 10-year yield 2.72%, the 2-year yield 2.51%, and spot gold at right now up 0.6%, 19.42 the ounce. West Texas Intermediate crude oil higher by 2.2%, 98.11 for a barrel of WTI. For the week, West Texas Intermediate crude up by just about 1%. Wall Street's focus shifts to earnings next week when financials start reporting. As for the broader earnings and market outlook, Dana Dioria is Co-Chief Investment Officer at Investnet.
Look, we are definitely moving into a period of greater volatility. I think companies that have been able to pass on costs, inflationary costs, or absorb them with greater productivity, we're going to now start to see maybe some margin pressure.
And speaking of those financials, next Wednesday we kick things off with J.P. Morgan Chase. JPM right now up by 2%. Citigroup will report Thursday. Citigroup shares up by 2%. Also Thursday, Wells Fargo up now by 1.9%. Tesla will start production next year of 3 products that have fallen well behind Elon Musk's original schedule. Word came at last night's big cyber rodeo party in Austin. Musk told Tesla faithful, quote, "We will be in production with Cybertruck next year. We'll be in production with the Roadster and with the Semi." Tesla shares lower today. Tesla trading down by 2.3%. Recapping equities mix with the S&P up now by 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we do each and every day at this time, we check in with Kriti Gupta. She's markets correspondent here at Bloomberg. She's got her chart of the day, and also she gives us her ION story. And if you still don't have Kriti's chart of the day, just send her an email at kgupta129@bloomberg.net. That's kgupta129@bloomberg.net. You can also follow her on Twitter and Instagram at Kriti Gupta News. So Kriti, today's chart, it looks at the UN Food Price Index, and it's setting a record.
Yeah, setting a record. What's interesting here is that it's setting 2 records. Not only is it at the highest since the data has been compiled, but it's also rising at the fastest pace that's ever risen before. So you kind of have this double whammy here in that not only are food prices really expensive right now, but they're also continuing to rise at a pace that we haven't really seen. And a lot of this kind of recent leg higher is coming from the war in Ukraine. If you actually read the report coming out from the UN, they said, well, look at what's driving some of these prices. It isn't all food necessarily. Rice, for example, has actually dropped in the past couple of months. But things like grains, things like vegetable oils, a lot of what comes out of Ukraine and Russia, that's really what's feeding this latest frenzy on top of an already tight kind of food market just coming from the post-pandemic recovery. So once again, there's a lot of pieces to kind of that go into this, but the reason it matters so much is because I'm going to throw some numbers at you if you guys don't mind, but in the United States, the West, Canada, people spend about 10% of their income on food. If you were to leave the United States, leave Europe, go to the rest of the world, that number gets to as much as half of their income. If you were to increase that number, more and more people are going to hit the poverty line. More and more people are going to have less to spend on education, on other resources, on housing. So that's really the concern here, that just how much can not just the United States take in terms of higher food prices, but the rest of the world.
You know, this is, I think, a bigger macro story. I really think in terms of food production, climate change, there's like some incredible tensions that I think are really changing the longer term dynamics here, Kriti.
Yeah, absolutely. And what's tricky here is that you also have to take into account some of the other costs that are getting fed into food prices as well. Because when you buy, say, a box of cereal, hypothetically, you're not just paying for the contents of that cereal, you're also paying for the transportation costs that come from the cereal, the raw materials, the packaging. There's so much that goes into it, and there is so much that's also rising on the back of that. We've heard about shipping costs. We've heard about raw commodity costs, oil prices for example. So that all gets kind of fed into food prices as well in terms of the end product. And on top of that, you have a lot of that consumer spending ability that a lot of grocery stores, for example, have been able to pass on to their consumers. Well, that's kind of fading too now as you start to see inflation just be persistent, not to use a Fed term here, but kind of stick around, and that's going to be a problem when it comes to affording food in the future.
Kriti, raises the question of, how you use the word persistent, but what it looks like in terms of prices declining. I mean, how do we think about other surges that we've seen in the past, 2007, 2010, and how long it takes for prices to come down around the world?
Yeah, I'm so glad you asked that because that's another component of the chart. In fact, the chart, I think, goes back 30 years. And the last two peaks that you saw were the two dates that you mentioned, 2007, 2010. And they were both for two different reasons. In 2007, you had this inflationary environment. Prices were getting really high, similar to the way they were now. And then you had it kind of feed into a recession. Then Lehman Brothers collapsed and the entire global financial system also collapsed. And that's kind of the history that we remember. But what we don't really think about is the fact that there were so many price pressures in the lead up to that created those conditions. The other peak is in 2010, like you mentioned. That's simply because there was that surging demand coming out of the recession in 2009. But then there was also a global crop crisis where Russia had a bad harvest, the United States was facing a drought, so you had less supply on that front too. The difference between the two peaks is that in 2007, it took months for prices to come back down to earth. In 2010, it took years to come back down to earth. So right now, just given the combination of factors, it's unclear whether that price relief is going to happen in months or in years.
Hey, Kriti, on your radar, a story about shale producers courting European buyers. What is it that you think we should bring to our audience's attention?
Well, we've heard a lot about Europe and how they're kind of looking to cut that Russian dependence on Russian LNG. Well, the United States is poised to make that gap, and it's actually really interesting. I was at CERAWeek last month, and they actually talked about the fact that this is an unattainable goal. The United States can't ramp up those exports that quickly, but au contraire, the story that you have right now is that these negotiations are happening now between shale producers and between European buyers to start creating that dynamic, to start creating the infrastructure so that by the end of the year at least, you do start to have that relationship, more LNG exports and more European buyers that are really interested in those conversations right now. So those negotiations happening in Houston this week, happening in Europe next week, something to keep an eye on.
All right, Kriti Gupta with her chart of the day and what she's got her eye on. Make sure to send Kriti an email if you want to get in on the chart of the day. It's kgupta129@bloomberg.net. Also, she's on social at Kriti Gupta News.
All right, let's get back to, speaking of news, world and national news. That's with Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. At least 50 people were killed, hundreds injured today in a rocket strike on a crowded train station in eastern Ukraine. Many of the victims were trying to flee the war. White House Press Secretary Jen Psaki condemned the attack.
This is yet another horrific atrocity committed by Russia, striking civilians who are trying to evacuate and reach safety.
Jen Psaki says the U.S. will help with the investigation into that attack. Will Smith's slap of Chris Rock at the Oscars has banished him from Academy events for the next 10 years, including the Oscars. Smith already resigned his membership, admitting his conduct was painful and inexcusable. The Academy today said Smith's, quote, unacceptable and harmful behavior, unquote, overshadowed the Oscar celebration. It is the first all-civilian trip to the International Space Station. SpaceX is flying 4 astronauts, including 3 paying customers, on a 10-day mission organized by Axiom Science, a startup that's building a private space station to replace the current one. Bloomberg's Ed Ludlow is in Cape Canaveral and says this is the wave of the future.
It will be the private sector that not only provides the launch, as SpaceX is doing, but that also provides the actual space station in space and brokers the seats for those high net worth individuals you'd imagine in the short term that want to go.
Bloomberg's Ed Ludlow. In baseball, the Red Sox lead the Yankees 4-3, and at the Masters, Danny Willett holds the lead at 4 under par. Tiger Woods is tied for 40th at 3 over. Stay tuned to Bloomberg for hourly golf updates and a special wrap-up of the day's action tonight at 11 p.m. Eastern here on Bloomberg Radio. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. So one of the things that certainly was first and foremost when it comes to business news this week and over the past week or so was about JetBlue and its offer for Spirit Airlines.
Yeah, our airlines reporter, Mary Schlagenstein, reporting that Spirit Airlines is going to actually hold talks with JetBlue over its $3.6 billion cash takeover bid that's threatening to disrupt a pending combination between Spirit and rival deep discounter Frontier Holdings Incorporated. JetBlue's offer, Carol, could lead to a superior proposal, Spirit said in a statement late Thursday after assessing the bid with financial and legal advisors. JetBlue's unsolicited offer topped Frontier's $2.9 billion cash and stock purchase deal, which Spirit agreed to 2 months ago.
Yeah, so it's tricky here. Further details on the timing of the JetBlue and Spirit discussions not disclosed. Spirit's board has not changed its recommendation that shareholders adopt the merger agreement with Frontier, and there can be no assurance that talks with New York-based JetBlue will result in a transaction, at least according to the statement. And then JetBlue came out, Tim, and they said in a separate statement that it was pleased Spirit's board recognized the, quote, compelling value for all stakeholders.
Yeah, I'm sure they're happy about that, right?
of its takeover proposal.
They're the ones who are making the overture.
They're like, we're so happy.
Yeah, please accept our $3.6 billion.
You know, could we have a little bit of a bidding war?
Maybe, I don't know.
Or does Spirit want to go with JetBlue, but they just want a little bit more?
I don't know. I still think the most fascinating part about this is the potential culture clash between these two companies. Spirit's a deep discounter. JetBlue right now, at least if you're looking at the front of the plane, it has a business/first class that rivals products, cross-country products from the big folks, United, American, and Delta out there right now. So it has a premium offer, and I wouldn't say that JetBlue has the same. It's by no means has the same discount offer that Spirit and Frontier have.
Mary Schlangenstein, who does the reporting here and follows the airline industry, she said JetBlue's cost would necessarily rise as it converts Spirit's bare bones business and aircraft to its own corporate model. I mean, you're kind of bringing it up to that level. All right, stay tuned for more on that. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow higher, S&P swinging between gains and losses on the minus side right now, but little change, down 2 points. We've got NASDAQ down 152, drop there of 1.1%. Stocks ending the week on a moderate note. Equities swinging between gains and losses, and the Treasury curve continues to steepen following declines sparked by the Fed's plan for aggressive monetary policy tightening. Tough week for stocks. S&P today down 3, again drop there of 0.1%. 10-year yield 2.71%. The 2-year yield 2.51%. Spot gold up 0.6, 19.43 the ounce, while West Texas Intermediate crude up 2%, 97.98 a barrel on WTI. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Grim scenes of devastation in Ukraine have made one thing clear. Europe must end its reliance on Russian fossil fuels as soon as possible. It's a tall order, to be sure, but the consensus among the European Union's 27 member states is moving in the right direction. A proposal has been aired to embargo Russian coal, and discussions are underway to do the same with oil. Reducing Russian gas imports, although more contentious, should also be on the table. Meanwhile, the build-out of new liquefied natural gas terminals to accept shipments from other countries should be paired with a strong push to boost renewable energy across the continent. Europeans have rightly been eager to show solidarity with Ukraine. They can do so by refusing to fund Russia's war machine. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we've got about 10 minutes left in today's trading session, getting ready to wrap up the week. Let's not forget earnings start in a big way next week.
Those little things?
Those little things with the big banks. JP Morgan, Morgan Stanley, Goldman Sachs. That will be a focus next week. Right now, though, we're focusing on stocks. We're seeing some selling into the close. Not quite at our lows of the day, as we just heard from Charlie, but nonetheless, moving down. Let's get to it, and let's get to the drive to the close.
Lisa Erickson is co-head of the Public Markets Group at U.S. Bank Wealth Management. Lisa joins us on the phone from Minneapolis, Minnesota. Lisa, how are you? How are things in Minneapolis?
We're having a great day. Thanks so much, Tim.
Is it really great? Why is it
You
great?
always, whenever everyone says that and the market's down, Carol says, is it really?
Do you really mean that?
Are you really having a good day?
Tell me what great means. No, but in this environment, it's a rough one. We held our Bloomberg
It's
Live.
not as rough as it was a month ago, Carol.
That's true. We had our Bloomberg Live Wealth event and talking with a lot of investment professionals like yourself. And I caught up with the president of the NYSE Group and Catherine Keating over at BNY Mellon. She's head of BNY Mellon Wealth. And there was a lot of optimism, but everybody's keeping a very close watch on how aggressive the Fed is going forward. What is it that kind of keeps you up at night when it comes to the outlook?
Well, to your point, Carol, we really do think the Fed is one of the key items we need to keep our eye on. And really the reason why is as they move from this approach of accommodation to normalization, they really have a tightrope to walk. And that's because coming into this year, we really knew already that the comparisons would be hard. We had such strong reopening in 2021 that it was just going to be hard for growth to beat anyway. And now on top of that, inflation has been elevated for longer than I think most expected. And on top of that, we have the very unfortunate human situation and tragedy in the Ukraine and Russia, which again may keep prices elevated and supply constraints going forward. So really, they've got a tough hoe in terms of really trying to moderate those price pressures while not hopefully denigrating growth to too great a degree.
Yeah, sometimes I have to say it certainly feels crass talking about equity markets in an environment like this because there is so much suffering happening around the world. But we should note that a lot of what we're seeing play out in markets today is a direct result of geopolitics right now, especially when it comes to inflation, when it comes to energy, Lisa. I'm wondering, can you give us some numbers behind how you're thinking inflation will moderate or if it will stay elevated this year? Because we do get CPI next week, and it's looking like it's going to be pretty hot.
Absolutely. Well, we do see that there are some pressures on the side to help that moderate. On the positive side, we have seen the labor force continue to heal, and particularly those participation numbers pick up. And that's really nice because as more workers come back into the workforce, that's going to help offset some of those supply chain pressures. And we had seen just organically some improvements overall in logistical chains and things like that. So there are some countervailing forces. Again, the wild card, I think, is going to be, to your point, some of these geopolitical events. It's really hard to handicap and to assess really what the outcome is going to be. But obviously, the longer those constraints continue, that's going to be a force to keep that inflationary pressure up.
All right, so what do you have to do then for investors' portfolios at this point, or how do you think about it in terms of, there's capital preservation, which sometimes in a crazy market environment, that's what it's about, just not losing too much in an environment rather than thinking about gains or outperformance.
Absolutely. Well, we're really at a balanced position right now on our outlook across asset classes. And what that means for us is really for the investor, all other things being equal, staying at their typical strategic allocation to equities. And the reason for that is despite, some of these risks that we're talking about and really the difficult situation, if you look at the underlying fundamentals, we're actually in an okay place. When we track our global health check of indicators across the U.S., what we see is really actually a solid picture. And while there's some slowing in some of the indicators, it's really from a very high level. And corporations have continued to do well in terms of their earnings. So we're starting from that solid operational base and really just watching to see how some of these risks play out as the year continues to unfold.
Okay, so you talked about what an investor should be doing right now when it comes to their own allocation and staying the course. If you were to deploy new money right now, where would you put it?
Would you put it in chips because they're selling off?
Yeah, well, we really are advocating rebalancing again to what those strategic positions would be in equities. And then on the fixed income side, we're really a little bit more cautious again on the back of the fact that the Fed has got this road to move towards in terms of continuing to normalize policy. And so with that more cautious stance with fixed income, we actually think an interesting place to invest is global infrastructure. We see that as an opportunity to benefit both from some internal to the U.S. ongoing reopening activity. It also provides some inflationary offset as well as provide some really nice diversified cash flows on an ongoing basis.
Hey, what about, market indicators? We follow different things, whether it's the VIX, whether it's the Dow Transports. The Transport's down another 1% in today's session. If I look for the week overall, down almost 7%. In times past, I'm thinking of different market cycles, we would say that that's a negative sign about what's to come in the economy. Do you buy it?
Well, certainly.
And I don't mean do you buy it in terms of, is it an opportunity, investment opportunity, or do you buy the signal that things are getting darker?
Well, certainly it is an important indicator to watch, but we really take a whole mosaic approach. So again, as we look at not only the transports and the VIX, but a number of other indicators, that's really leading us to this more balanced conclusion that at least as far as the risk-on stance, really just staying more at a neutral position with typically wherever you would be and continue to watching how that data unfolds. While, again, there's some risk on the horizon, we do see this appetite for reopening, and consumers and corporate coffers really continue to remain healthy, although there's been a little bit of drawdown on the consumer side. That, again, is a support for the equity market.
Really interesting stuff. We only have about 20 seconds left with you. Does the U.S. hit a recession in the next 12 months?
Well, our base case really is we're going to see some slowing, but we aren't seeing recession yet in the cards.
Okay.
But again, the path forward is pretty uncertain, so we're going to just have to continue to monitor.
Yeah.
Monitor and buckle up.
You sound like the Fed, right? We're going to be data dependent, which makes sense. I really think that's a fair assessment in terms of where we are. Lisa, listen, have a great weekend. Nice to check in with you again. Lisa Erickson, she's Senior Vice President, co-head of the Public Markets Group over at U.S. Bank Wealth Management, on the phone from Minneapolis, Minnesota. We've just got a few minutes left in the trading session. We are seeing some selling, slight selling into the close. S&P down about 15 points. Dow still holding on to a gain of about 1/3%. And you've got the NASDAQ down about 1.4%, down 193 points. So really taking the biggest hit among those major equity averages. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on radio, TV, and YouTube. We are counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Katie Greifeld in for Taylor Riggs, counting you down to the closing bell here on this Friday afternoon. Here to help take us beyond the bell. It's our global simulcast with Carol Masser and Tim Stenovic. We welcome in our audiences across Bloomberg Television, radio, and YouTube. And Carol, a relatively flat day, a significantly down week here. Most of the things higher on the day and on the week appear to be more defensive.
Yeah, absolutely. What's interesting, too, and I know we talked about it earlier, Tim mentioned the Philadelphia Semiconductor Index, the SOX, an analyst call really putting kind of a bummer on the trade today, down more than 2%. But if you take a look over the past 8 trading days, it's down about 13 to 14% since March of 29. So we're really seeing some pressure in selling when it comes to that group.
Yeah, relatively flat when it comes to the S&P 500 today. They're still down 0.3%. It is shaping up to be the first down week for the S&P 500 in 4. Same goes for the NASDAQ 100, too.
Tell you what's not on the downside is the dollar. We're managed to just cling on to the green for the day. It's the 7th straight day of gains. Now the highest since, well, what is it, July of 2020? So clear strength, evident strength. I wonder what that means for some of the global stocks.
Yeah, it is interesting that you saw the semiconductors, to go back to Tim's point, really the underperformer here when it comes to tech, when it comes to the broader index as well. And we did see some selling pressure into the close really just in the last 30 minutes.
Yeah, and definitely a lot of people now trying to reposition for what, of course, is going to be not only the start of the earnings season, but there's a lot of data coming out next week that'll maybe give us a little bit more of a sense of where we stand, of course, with the economy, of course, CPI data, something to chew on, and retail sales. Have you been buying anything, Caroline?
Yes, and none of it's arriving.
So that's still a problem.
It's still a problem. So #2021, but it lives on, team.
All right, the closing bells here on this Friday afternoon. The Dow Jones Industrial Average, look, is actually going to finish higher here on the day by about 0.4%, though still down on the week, though only fractionally by about 0.3%. The S&P 500 is going to finish lower by about 12 points on the day, or about 0.2%. It's lower on a weekly basis by about 1.2%. And the NASDAQ Composite down about 186 points, or 1.3% on the day, 3.8% here on the weekend. You take a look real quickly at the Russell 2000. Some of those small cap cyclical names never really got any kind of a bid all week long, down for a 4th straight day, just by about 0.7%. I can't really see that, but down on a weekly basis by about 5%, Carol.
All right, Romaine, and I've been watching the Dow Transports. I know we all have been down about 1% for the day overall. Definitely off its lows, though, of the session, but still down about 6.7%, Katie, for the week overall.
Also off its lows, financials actually having a good day. If you take a look at the sector level, of course, energy right up top there, but financials also making a run for it. They had a horrible week, ending on a different note ahead of earnings. On the downside, like we were saying, you have semis, you have the chip makers down there. You also have tech broadly, and it's a really nice even split, and that's exactly what's weighing on the broader benchmarks, Carol.
Yeah, I'm looking forward to what the financials have to say next week. Let's see if it's as down as investors have been kind of almost anticipating, it feels like, in terms of the trade. Hey, let's get to some of the gainers. Discovery up about 6%, near its highs of the day, rallying. Sports Business Journal noting that the Discovery Warner Media deal could close today, so I've been kind of watching NI hot and NI heads.
You did this like yesterday or the day before.
I did it. It was a decline.
You're like all over this, right? You're really into this.
You know, the stock is down significantly since May 17th when it was announced last year. It's been under a ton of pressure, and it'll be interesting to see what their streaming strategy is if they bring it all together.
Yeah,
we kind of like these media companies, you know. Gonna put that out there. EPAM Systems.
Ton of news. Hashtag Carol.
Yeah. EPAM Systems. We talk about this a lot. We have really over the last month or so, or since the war in Ukraine began. It finished up more than 10% in today's session. It's still down more than 50% so far this year. But late yesterday, after the close, we heard that the company has begun the process of exiting its operations in Russia in phases over the next 3 months. Big IT outsourcing company. They've had 14,000 employees in Ukraine, and we know the CEO under some criticism early on for not being critical, if you will, of Russia. One more, Coterra Energy, it's an E&P company, top of the NASDAQ 100, up more than 7% in today's session. Mizuho raising its price target to 44 from 38 a share. The stock closing at 28 and change, Tim.
All right, well, let's get to some of the notable decliners today, starting with Tesla. Among the worst performers on a points basis in the S&P 500 and in the NASDAQ 100, finished the day down an even 3% today. There was a lot of Tesla news, but no real catalyst to send it lower. It was lower by about 5% this week. We got some clarity on dates about the Tesla Semi, the Cybertruck, the Roadster at last night's event, but as Sean O'Kane told us...
Was that clarity? Is that what you're calling that?
As he told us, take it with a grain of salt, because, we've heard this story before, especially when it comes to those robo-taxis, right? I mean, flashback to like 2018.
Who's the market leader in EVs? Can I just ask?
Tesla is. I mean, look, more 310,000 deliveries in the first quarter of the year, but still, All right, so a little bit of selling there today.
It eventually gets there. It's just a little torture in the process.
Robinhood shares taking a big hit today, down 6.9%. This after Goldman Sachs cuts it to sell from neutral, saying that softening retail engagement levels and profitability concerns will likely limit any performance. Shares are down more than 80% from its highs of August, just following its IPO. And then I want to take a look at shares of Starbucks as we wrap up Howard Schultz's first full week on the job, back on the job for a third time. For a third time, I should say. Finished lower every single day this week, finishing the week down by over 10%, down 1.9% today, as he really outlined his plan to work on labor relations as the company works with employees as it faces unionization efforts around the country.
Yeah, many wanting to unionize. Meanwhile, of course, Starbucks also feeling some commodity price pressure as you see coffee beans continuing to be relatively elevated. I'm looking across the commodity sector when you go global macro movers for our radio audience. I'm looking quite a mixed picture. For once, we actually saw a bit of a bounce back in oil, but look, we're only at $102 a barrel now for Brent only, I say. WTI crude, $97 a barrel, almost 98. This as we're actually sort of erasing a lot of what had been the rally higher in oil since the invasion of Ukraine by Russia. Now, this is as we start to worry more perhaps about some of the slowdown in China, what the impacts of course, the COVID surge over there are having, what we really do in terms of the buying strike that we start to see when oil hits such elevated levels. So oil pushes down for a second week, but we see it just higher on the day. I'm looking at iron ore off by 2.4%. Some mixed pictures over in metals. There's a mixed picture in foreign exchange. And in fact, we've had 7 straight days of gains on the US dollar. That means 7 straight days of losses on the euro. And in fact, the euro has been under pressure as we worry about what happens over the course of the weekend with the French president election. Will we not see some sort of continuation of Emmanuel Macron or what Marine Le Pen could mean for Europe in general and indeed France? We see the euro on the downside. British pound also getting hammered. We're off by 0.3%. A lot of bearishness being factored into the fact that the Bank of England, look, just isn't going to move at the same sort of pace as a hawkish Federal Reserve. And that's, of course, why we've seen continuing yen weakness. We're off again by 0.3% against the dollar remain.
Yeah, and you talk about yields. Of course, short-term Treasury selling off here for a 5th straight week, although it should be pointed out these are the smallest losses that we've seen, not only during that stretch for the 2-year yield, but the smallest losses across the curve on this week here. You're looking at a 6 basis point move higher on the 2-year, 19 basis points on the 5-year, but take a look at the longer end of the curve here with regards to the 10 and the 30-year, basically call it 30 points pretty much across the board. We should point out volatility remains elevated, at least as measured by that MOVE index, still hovering not that far off from that 2-year high that was reached just a little bit short towards the end of the month here. A lot of debate now what the neutral rate ends up being by the time we get to the end of the year, whether it's going to be 2.5% or maybe somewhere a lot higher.
Yeah, I mean, the week that was, right? And in particular, it really was a bond market week once again, right? And especially Romaine, love how you went through what happened with yields throughout the week, and especially at the longer end of the curve. It does feel like, okay, we've talked so much about the shorter end of the yield curve, Katie, but it is interesting to see kind of that recalibration at the longer end.
Absolutely, and it's worth pointing out that most of that sell-off was driven by real yields moving higher. Break-even and inflation expectations really didn't move, and it's an interesting setup going into next week. I think it was Caroline who highlighted earlier that we have a lot of Treasury supply coming, a lot in terms of auctions that could push yields around even further.
And a lot in terms of economic data that we get next week. Of course, CPI, we get retail sales and more. The question is, when we get CPI, do we start to see any sort of moderation when it comes to prices?
You calling peak inflation?
Well, Bloomberg Economics had an interesting piece that sort of looks at two different sides of the coin if we do start to see moderation. Is it a sign that consumers are pulling back on their discretionary spending? Or is it a sign that we're seeing that shift in spending go from goods to services like we did pre-pandemic? So it's sort of a normalization.
We get retail sales next week too.
Yeah, and those retail sales numbers are going to be interesting because when you look at, whether the ex-autos gas or the control group numbers, those are basically at zero, or at least in terms of economists' expectations here. So there is some sense, at least as baked into those economic forecasts, that maybe spending has moderated.
Well, and we've talked so much about balance sheets, right? And I know we can go back and forth a little bit about the healthiness or lack thereof, but most people will often say that corporate balance sheets and individual household balance sheets, if you look at the numbers, the statistics, Brookings has done a lot of work, they're in stronger positions than they were pre-pandemic. But how long does that last?
Yeah, and don't forget we got an ECB decision. I completely forgot about that.
We haven't even talked about bank earnings.
Yeah, bank earnings.
Bank earnings.
Whatever. Well, you got, look, but there's a lot
Wait, so what, okay, so this is, what a crazy week. We've got a lot of stuff going next week. What's the most important? Is it bank earnings?
French
is it
election.
ECB?
If that goes a different direction than had been anticipated.
I think what's coming out of here, and don't forget the ECB decision too, which I think when you talk about the hawkish, I guess you call it hawkish that we got out of them last time, the commentary we got out of Christine Lagarde, you combine that with an election. I have to tell you put this on my radar screen a little bit earlier, Caroline, and earlier this week here, and the differential between Macron and Le Pen this week versus what it was a few months ago is absolutely astonishing.
3.5 points.
Yeah, and let's not, obviously we've gotten a really big lesson of not underestimating geopolitically, right, of what's going on around the world and how it can impact ultimately everyone. All right, guys, lots going on, lots to come next week. Have a good and safe week. And I know your guys are going to continue. We're going to continue. But
we have some wine coming up.
We have some wine, so feel free to step in.
Of course.
Sorry.
Every day with you.
Where's your whiskey?
Malbec World Day is coming up, by the way.
Oh, God.
We have 6 bottles here, actually.
Hey.
Okay, we're all stopping by radio in the next commercial break.
All right, we'll talk to you later, guys. We'll see everybody on Monday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Carol Masser. Let's get to right now Nancy Lyons for a check of the latest world and national news in D.C. Hey there, Nance.
Thanks, Tim. Welling up with tears at a celebration at the White House, Judge Ketanji Brown Jackson says her confirmation as the first black woman to the Supreme Court shows the progress of America.
I am the dream and the hope of the slave.
Jackson's emotional remarks come a day after the Senate approved her nomination. She'll take her place on the court this summer when Justice Stephen Breyer retires. Global food prices are surging as the war in Ukraine chokes off crop supplies.
The war has created havoc with supply chains in the Black Sea breadbasket region, upending global trade flows and causing panic about shortages of cooking oil and wheat. Farmers in Ukraine are cutting back on planting, and they're struggling to export what's already harvested. This as high energy and fertilizer prices are raising food production costs even more. Food prices were already surging before the war, but now they've jumped another 13% in the past month, a record increase. In Washington, I'm Amy Morris, Bloomberg Radio.
Will Smith has received his punishment for slapping Chris Rock at the Oscars. The Academy of Motion Picture Arts and Sciences says he will not be able to attend any Academy events for 10 years, including the Oscars. Smith preemptively resigned from the Academy last week. In baseball, the Red Sox and the Yankees are tied up at 4-4 heading into the ninth. And at the Masters, Sungjae Im, Scotty Scheffler, Charles Schwartzel, and Danny Willett share the lead at 3 under. Tiger Woods is tied for 29th at 2 over. Stay tuned to Bloomberg for hourly golf updates and a special wrap-up of the day's action tonight at 11 Eastern here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nancy, thank you so much. Nancy Lyons in our DC newsroom. So this is a story that we have been talking about for a long time, and understandably so, here at Bloomberg. And it is the most read story on the Bloomberg in the past 8 hours. Roger Ng, the only Goldman Sachs banker to go to trial over the global 1MDB scandal, was found guilty for his role in the epic looting of the Malaysian fund.
He's 49 years old. He was convicted on Friday of all 3 counts in the case, including conspiring to violate U.S. anti-bribery laws and conspiring to launder money. He faces a prison term as long as 30 years, but he is likely, Carol, to get far less time.
Now, the verdict coming after an 8-week federal trial in Brooklyn, New York, that featured startling confessions from Tim Leissner, Ng's boss at the time. Leissner, who pleaded guilty, was the key witness against the former Goldman Sachs Group banker. On the stand, he admitted to telling a raft of personal and professional lies in the multi-billion-dollar plunder of One Malaysia Development Bank, for which, or One Malaysia Development, I should say, for which Goldman arranged a trio of bond deals. I mean, this was, the Malaysian sovereign fund and, the wheelings and dealings of what was going on ultimately.
We should note that Ng showed no reaction as the jury's forewoman read out the verdict. On hearing it, his lawyer hung his head. Ng remains free on a $20 million bond. U.S. District Judge Margot Brody didn't set a sentencing date.
No, and as our reporting points out, our Patricia Hurtado, who's been on this story, saying it's a hard-won verdict for the United States in the aftermath of fraud surrounding the sovereign wealth fund. It was set up to help Malaysia's people and the economy, but instead was used to essentially line the pockets of government officials, bankers, and intermediaries with an estimated $2.7 billion.
Alleged mastermind Joe Low, who was indicted with Ng, is accused of paying tens of millions of dollars in bribes to officials in Malaysia and Abu Dhabi to clinch the bond deals and of taking $1.42 billion for himself. Proceeds from the scam were used on items including a $200 million super yacht, as well as to finance the film The Wolf of Wall Street.
Case of black mark on Goldman. In 2020, a Goldman unit admitted it had conspired to violate U.S. anti-bribery laws, the first guilty plea ever for the firm, founded in 1869. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Losing week for the Dow, the S&P, and NASDAQ. Tough week for NASDAQ, down 3.9% this week. On the Dow this week, down 0.3%. And this week, the S&P dropped by 1.3%. Turned out to be a mixed Friday. The Dow higher, S&P, NASDAQ both lower today. S&P fell 11 points, selling into the close, down by 0.3%. The Dow advanced 137 points today, up 0.4. NASDAQ had a down day, dropping 186 points, down by 1.3%. Treasuries fell today. The 10-year down 11/30 seconds. 10-year yield 2.70%. 2-year yield 2.51%. Spot gold up 0.7. $19.44 the ounce on gold. West Texas Intermediate crude up 2.1%. 98 even a barrel on WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So in our latest installment of the Editor's Roundtable, we look at a few things, including a piece in the new issue of Business Week magazine, which is about a fintech company that is hoping to repair centuries of racist banking.
Here's Bloomberg reporter Jordan Holman and Business Week editor Joel Weber with more about Greenwood and the 700,000 believers in the so-called neobank.
This is all about what the future of banking could look like, right? And to be an app on a phone is sort of what a lot of banks aspire to do. What's unique about Greenwood is that post George Floyd, the founders behind this recognize that there are a huge group of Black Americans, Latinx Americans who lack access to Black-owned, minority-owned banking. And they realized that maybe this route through neobanking, even though I don't think maybe the founders necessarily knew any of this at the time, could basically open up the financial market, and allow them to tap into a huge group of people who have never really been catered to in this way. So Greenwood was basically formed, and then everyone's been waiting for it ever since. 700,000 people have been on this waiting list, and just recently, slowly, we're starting to see some of them get access. So Jordan, who are the people behind this vision, and how have they mastered hype?
Right. That's such a great description. So the founders are Paul Judge. He comes from the tech world. And then you have Ryan Glover, who's also entertainment, and they both live in Atlanta. So like you said, they are not from the finance world at all, but what they really do know is culture, and they know how to make content. And so for all of the 700,000 people who signed up, not knowing what this app was yet, having this name Greenwood, which obviously has these historical resonancies, when you think about the massacre in Tulsa, they just know how to market this really well. And they brought in civil rights icon Andrew Young. You have Killer Mike, who is for the younger group. So they've done just such a good job of building the hype. What's happening now is rolling out the product. What does that look like? Is it actually going to solve this racial wealth gap that is so entrenched in the country? And then also, will it provide, will it live up to what middle class Black and Latinx Americans want, which is a banking service that's super accessible, that understands their needs, and that really speaks to them.
I mean, my question is, will it really be a bank, right? And this has been the problem. Like your story, just so getting into the fear that many Black Americans have had when trying to access the established bank community, which is increasingly has largely been run by white individuals that have kind of pushed them out.
What I love about this piece is we do dive into the history about basically the horror of being a Black person banking in America. And it starts all the way back at the end of the Civil War, almost that civil rights movement, but it's so much longer than that. And there was Freedmen's Bank, which the Congress enacted and said, oh, for the first time, African Americans are earning wages. They're coming out of slavery. And so African Americans got really excited about the prospect of, one, earning money, saving it, and hopefully building that generational wealth. But it was so mismanaged. This bank was run by white people. There's speculation, all of these things. And so when a bubble happened, most of the depositors lost their money. And then you see, and throughout the years, it did not get better. There's redlining, there's all of this. So what Greenwood has the opportunity to be is a Black-owned bank or neobank that is bringing in all of these important icons and saying, hey, we are for you, and we are rolling out content around financial literacy, and we're going to make it fun. You're not thinking about like going into a bank and maybe not being understood.
But Jordan, what you do also is write about this tension that exists. Even though Greenwood has these ambitions, it's still working within a system that is dominated by banks, by what you describe as essentially white-controlled banks, because it has to use another bank in order to provide its banking services. You write that the fintech is setting out to build a black-powered banking system being funded by white-controlled banks and its services provided by another white-controlled bank. Explain what's going on there, but also how Greenwood is trying to make it different.
For sure. So as a neobank, you're not a bank. You need to be insured by FDIC bank. And so when the founders went out, like at the very beginning, as they were trying to build this up, they're like, it would be great to be backed by a Black-owned bank. But the reality in this country right now is that there's only about 20 Black-owned banks left in America.
They just don't exist.
Yeah, and they do not have the scale of the largest banks that we all probably bank with. And so when they were building the system, they realized they did have to work with the white-owned bank because that is our financial system right now. So even though, they were trying to be revolutionary, one of the founders told us the revolution is complicated.
The revolution is complicated. That was just a portion of this week's Bloomberg Business Week Editors Roundtable. There is more of that. You can find that on our weekend show, Saturday at 8 a.m. Wall Street time on Bloomberg Radio. You can also check out the entire conversation on our podcast feed at Bloomberg.com. We talked about Jordan's story. We also talked about the domestic cover story.
Yeah, that story is about David McCormick's Senate campaign. It shows that Republicans aren't close to moving on from Trump, much to the chagrin of many establishment Republicans who are already elected.
I got to go back to Jordan's story. What I really, she and Brett Pulley, forgive me, really got into the history of how the financial system, specifically banks, have really not opened themselves up to Black Americans over and over and over again. And we're still there.
This is not a story from the last 3-4 years.
No.
This is a story from the last 250 years here in the United States.
Exactly. So be sure to check out our roundtable on Bloomberg Radio, 8 a.m. Saturday. Also check out our podcast feed for the whole conversation. And check out the magazine on newsstands, online, and on the Bloomberg terminal. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You are listening to Bloomberg Business Week, and it's been a crazy week, a crazy year. And Tim and I have the perfect way to wrap up this week and this day.
We are going to be drinking some Malbecs this afternoon. I'm pretty excited about that.
I have to say it's a favorite wine of mine, and I'm looking at, the two of us have been looking at this incredible book. We're going to check in with the author of the book and also talk a little bit about their vineyard, if you will.
It's Laura Catena. She's going to be joining us in just a few minutes. We're pretty excited about that. First, though, let's get to Charlie Pellet for some business news.
Right, I thank you very much. Save some of that bottle for me. We've got the Dow higher today, the S&P, NASDAQ, both lower today. Turned out to be a losing week for the Dow, the S&P, and NASDAQ. Let us begin with those weekly numbers ahead of the weekend here, with NASDAQ down this week by 3.9%. The Dow down 0.3%. S&P tumbled by 1.3%. Markets ended the week on a negative note as equities faded in the final few minutes of trading. Treasuries fell following declines sparked by the Fed's plan for aggressive monetary policy tightening. S&P down today by 12, a drop of 0.3%. The Dow up 137, up 0.4. NASDAQ down 186, a drop of 1.3%. 10-year down 11.30 seconds. 10-year yield 2.70%. Spot gold up 0.7, 19.45 the ounce, while West Texas Intermediate crude oil today up 2.1%, 98.03 for a barrel of West Texas Intermediate crude. As for the economic backdrop, Lisa Erickson is co-head of the Public Markets Group at U.S. Bank Wealth Management, and she was our guest moments ago right here on Bloomberg Business Week.
If you look at the underlying fundamentals, we're actually in an okay place. When we track our global health check of indicators across the U.S., what we see is really actually a solid picture. And while there's some slowing in some of the indicators, it's really from a very high level. And corporations have continued to do well in terms of their earnings.
Goldman Sachs Group analysts have cut Robinhood Markets to sell less than a year after the bank led its popular initial public offering. It joined J.P. Morgan Chase, the other lead IPO bookrunner, in turning bearish on the free trading app that rose to prominence during the peak of the pandemic. Robinhood shares today down by 6.9%. Recapping, stocks mixed. S&P lower by 12, down 0.3. The Dow up 0.4. NASDAQ on a losing week, down 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Safe to say I've been dreaming about this all week, or at least as soon as our producer, Paul, mentioned that this was coming up. And yes, it is because we're going to get to savor some wine. But moreover, we're going to talk to a fourth-generation Argentine vintner. She's a physician. She's also an author.
Laura Catena is managing director of Catena Zapata Winery. She joins us via Zoom from San Francisco. Laura, how are you?
I'm great, thank you.
Well, we're pretty happy to have you join us because we've been looking forward to this all week, as Carol mentioned. Hey, I just want to start with getting an idea of what you're seeing in the market right now when it comes to wines from Mendoza.
Well, you're seeing a lot of Malbec, which is our signature variety, but we also make many other wines, Cabernet Sauvignon, Chardonnay. We make Pinot Noir. And what's characteristic about our wines, they're from high altitudes, so they have a long time to ripen. So they're very rich, but because of the long ripening time, they're very smooth. So this is the characteristic of Argentinian wines.
All right, and I don't mean to get so serious on you, but I know that we've done a lot of reporting here at Bloomberg, and we've got a lot of time to talk. But climate change, how is that impacting you guys, if at all?
Well, for sure, there is warming all over the world, a little less in the southern hemisphere than in the north. But the main thing is that my father, he moved most of our vineyards to the high altitude regions about 30 years ago. And there is cooler climate here. He was looking for a place to make more mineral, high acidity wines, more age-worthy wines. But he also found this place that is more resilient with climate change. So it is an issue for vineyards all over the world, but we are in a very good position because of the high altitude and the cool climate at the high altitude.
But what are the changes that you have seen over 4 generations of making wine? I mean, there must be some climate changes, right?
Yeah. Well, the bigger issue in Argentina is not the temperature. It's actually the water, because we have the glaciers of the Andes that the native peoples of Argentina created canals to irrigate. And that's why we can have farming. That's why we can grow vineyards and orchards, and we are a farming place. And there's less and less water from the glacier. So we're working a lot on, how to capture water, how to use less water. That is the bigger issue for us in Argentina, water.
What's interesting too, and I think about the process, how technology is increasingly, Laura, playing a bigger role in something like when it comes to running a winery or running a vineyard. How has that kind of impacted what you guys do as well?
Yes. So, there is this vision of winemaking as everything's done by hand, and people are harvesting by hand, and they're sorting out the grapes, and then you're stepping on the grapes with your feet.
I was going to say, I love Lucy, right? We all went there, right? It's a lot more high tech though, right?
Yeah, and there's a lot of these beautiful traditions. And my philosophy, I'm a medical doctor. And so for me, people are very important. And that's one of the issues. A lot of the people want to move to cities. This is happening all over the world, in all the wine countries. It's happening in California, in Australia, in Europe. And what I say is, let's use technology when it helps us stay in better health as people. So, for example, a lot of hand harvesting, if you were doing that every year for 4 months, you would start having severe back problems.
Yeah.
So actually some machine harvesting is good. And actually when it rains a lot, you can't harvest by hand. So I'm a big fan of using, we use robots to lift big boxes filled with glass. Of course we should use those robots. We don't want people injuring their backs. So my view is, let's keep the typicity of the wine, keep the different parcels, the different altitudes, the single vineyards. Like the diversity of wine that you see today is unprecedented. There's more great wine out there than there ever has been. But let's also take care of the people who work in the vineyards and in the land, and use that technology to make their lives better. And that's my goal here.
Hey, Laura, we only have 40 seconds left with you. Then we're going to come back for some more. But let's talk a little bit about inflationary pressures, because it's something that we've talked about a lot on Bloomberg. And about 30 seconds, then we'll come back with you for more.
Okay.
What inflationary pressures are you seeing across the industry?
In Argentina, we have 50% inflation.
It's crazy.
So I always say it's not that bad for you in the U.S. So
that's a good point.
We're seeing, our importers, they're having to pay more for shipping. It's hard to get the containers. We're having to pay more for glass. We're having to pay higher salaries. So there are definite inflationary pressures, but I can tell you that it's worse for us in Argentina than for you in the U.S., if that makes you feel any better.
It's funny that you say it, because we do talk about that global perspective of really understanding it. Hey, Laura, sit tight. We're going to come back and continue more with Laura Catena. She is managing director at Catena Zapata Winery. She's got a book out too, Malbec Mon Amour, and we want to talk to her about that. And lucky for us, we're going to sample a little bit of Malbec as well, which is, for me, the perfect thing to do on a Friday.
Well, let's get to Washington, D.C. now for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Thanks, Tim. A special celebration was held at the White House today for newly confirmed Supreme Court nominee Ketanji Brown Jackson.
I strongly believe that this is a moment in which all Americans can take great pride.
Now that President Biden has gotten his first Supreme Court nominee confirmed, he may want to turn his attention back to the rest of the federal bench.
President Biden moved quickly to fill open court seats in his first year in office, but since Justice Stephen Breyer announced his retirement plans in late January, the president's put forward only one nominee, and there are 19 open circuit court seats. George Washington University law professor John Collins tells Bloomberg Government the president's close to losing valuable time if he doesn't put more nominees forward soon. Republican Senator Lindsey Graham has hinted it could be a slow process for the president if the GOP takes over the Senate Judiciary Committee next year. In Washington, I'm Nathan Hager, Bloomberg Radio.
The first all-private human spaceflight mission is on its way to the International Space Station, carrying a crew of 4.
3, 2, 1, 0. Ignition. Stop. Go Falcon. Go Dragon. Godspeed. Axiom 1.
That trip is the first by Axiom Space, a Houston-based startup that plans to assemble a private space station beginning in 2024. In baseball, the Red Sox lead the Yankees 5-4. It's in extra innings. It's the middle of the 10th. And at the Masters, Scotty Scheffler is in the lead at 4 under par. Tiger Woods is 1 over and tied for 22nd. Stay tuned to Bloomberg for hourly golf updates and a special wrap-up of the day's action tonight at 11 p.m. Eastern here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. In just a moment, we're going to get back to Laura Catena over at Catena Zapata Winery. We'll continue talking about Malbecs. In the meantime, this was a company and a stock that you talked about today, right?
Yeah, I've been keeping a close eye on shares of Starbucks this week. It's a company that I've followed for years, and I find it fascinating that Howard Schultz is coming back yet again as interim CEO this time, as the company really looks to smooth over its relationship with its employees around the United States. But interestingly enough, Carol, in his first week back on the job, Starbucks shares have fallen every single day to finish the week down just about 10%.
Stock's down about 30% so far this year. I mean, it's a almost $94 billion market cap company. It's kind of ubiquitous, I feel like, within our society and our world. He's credited with inventing Starbucks culture as a third place for people to spend time beyond their homes and workplaces. And he isn't taking his new role as interim chief executive officer lightly, Tim.
Yeah, he's frozen stock repurchases. That was part of a $20 billion package, saying that the money would be better spent on employees and cafe improvements. He also dismissed the company's top lawyer while pledging to offer better benefits for workers. That, of course, to dissuade them from unionizing.
Yeah, it's a sensitive time for the company. It's already facing a barrage of expenses. In February, the chain said it was seeing a surge in costs for isolation pay and training its workers, along with supply chain hiccups related to the pandemic. Estimates compiled by Bloomberg project that operating margin for the company will narrow to 16.3% this fiscal year, down from about 16.8% last year.
Okay, let's go back to a history of Howard Schultz and Starbucks. A lot of people say that he's the founder. He's not. He joined Starbucks when it had, I think, 10 stores, but he did lead Starbucks' aggressive expansion in the 80s and 90s before stepping down as CEO in 2000. He then returned again as CEO from 2008 to 2017. In his third go-round, the 68-year-old is rejoining the board and handling day-to-day operations as the company searches for a new leader, which he says will be completed by the fall.
They've been raising wages, but inflation pressures are really hitting some of their core goods like coffee and dairy, and profit estimates for the company have come down about 3% since the year began because of that inflation pickup. All right, we're going to get back to our guest in just a moment.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tough week for NASDAQ is behind us. It is on to the weekend this week. NASDAQ was down 3.9%. Today, we had the NASDAQ Composite Index falling another 186 points, down 1.3%. S&P today down 11, a drop there of 0.3%. The Dow, though, today higher by 137, up by 0.4%. Equities did swing between gains and losses. The Treasury curve continued to steepen following declines sparked by the Fed's plan for aggressive monetary policy tightening. We did see selling into the close. 10-year yield 2.70%, 2-year yield 2.51%. Spot gold up $14 the ounce to $19.45, up 0.7. West Texas Intermediate crude up 1.8%, $97.78 a barrel. New York City is vowing not to open any new bank accounts with Wells Fargo after a Bloomberg News investigation found the bank approved black homeowners seeking to refinance mortgages in the pandemic at a far lower rate than white ones. Wells Fargo shares up today by 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Want to get back to our guest. Laura Catena is still with us, Managing Director at Catena Zapata Winery, and she's got a book out, which we want to get into, Malbec Mon Amour, and she's still with us via Zoom from San Francisco. And as we do, because we want to talk a little bit about the book and the history of Malbec, because who knew there were so many different terms? It's got such a rich history. In the meantime, we're going to open up Catena Malbec 2019, which you were so kind enough to share. It's a Friday. So tell us, though, about the book and why you wanted to do it and really, educate people about this type of wine. And I'm going to pop a cork, hopefully.
Malbec is a very, very ancient grape, just as old as Pinot Noir. It's actually an older grape than Cabernet Sauvignon, for example. It's been around since the Roman times. It was described by the Romans when they walked through France. And then it was very important in the Middle Ages. There was this queen called Eleanor of Aquitaine who brought it from France to England. And then it was also very important in Bordeaux, where all these famous Grand Cru wines from Bordeaux come, and it's part of the blend there. But it came to Argentina in the middle of the 19th century, and now it's more famous from Argentina than from France. It's the variety that's the flagship variety of Argentina, and it's known for its very dark color. It used to be called the black wine, very rich flavor and smooth tannins. And it's the grapes that my great-grandfather, who came from Italy, first planted in Argentina in 1902.
Oh.
That's why I'm the fourth generation making this wine. And the Catena Malbec is a high-altitude blend. And it might be, our most sold wine in the world, this Catena Malbec. What do you think about it?
I really like it.
Are you a red wine? Because I'm a big red wine drinker.
Oh, yeah, I am too. It's not like I know anything about wine, despite the fact that I grew up in a wine region of California, but I know what I like, and this is good.
Laura, what I will say is I'm a big Cabernet drinker. And I want to say 7 years ago, started drinking a lot of Malbec, and I love it.
Oh.
This is really lovely.
Yeah, it has the power of the Cabernet, but the smoother tannins, and it's just a different thing. I mean, I also really love Cabernet, and we make a wine that's a blend of Cabernet and Malbec that I also love. But I think that Malbec on its own is just delicious, and it's really easy to pair with so many different kinds of foods.
And that's the thing I think I like about it is I'm not a very traditionalist, like if it's fish, it has to be white, or if it's meat, it has to be red. But I just like red, so I just drink red with everything. But Malbec in particular, I find I can kind of, pair with almost anything, which is just nice.
Yeah. But you know why that's because it has good acidity because of the high altitude, because it's not too hot. And then it's got these smooth tannins. So even with something that, has some bitterness or it's really fatty, these smooth tannins of the acidity cut through it. And that's why, I love what you're saying, that you compare Malbec with almost anything. And that's why.
Okay, let's talk price here, Laura. I'm just curious, a bottle of this is the 2019, right, Carol?
Yes.
This is 2019.
Yeah.
How much does it run you?
So that should be around $22, $25. So,
That's pretty affordable.
Definitely good price. Yeah.
And I mean, we do have the Lamborghini CEO on next week, so our products that we, companies that we cover really run the gamut in terms of price.
Well, it's funny. Tim and I, Laura, were talking off air, and I said I've had some very expensive wine. And, I've also had not so expensive wine. And I feel like there's so much out there now, the offerings from vineyards and wineries, and that the whole idea that you have to spend a ton of money to get a great bottle of wine, it's not true.
Yeah. Well, no, and we also have, $100 Malbec, a $300 Malbec. But I have to say that I agree with you that, for every day, $20, $25. And then if you want to age something, special occasion, splurge a little bit. I don't know. If there's one thing I will spend money on, it's wine. But, of course, I'm in the industry.
Well, it's wine and shoes. Let's be honest about what matters. Hey, can we talk about can we talk about this book? It is beautiful, and it really is it's a history, right, of Malbec and Argentine wine and the Argentinian Malbec. Tell us about this and why you wanted to put this out there.
Yeah, so, I felt that people didn't know the history of Malbec. Some people thought maybe it's something new that just showed up because, you didn't see a lot of Malbec in the United States 20 years ago, but it's been around for 2,000 years. And I wanted to shout it out. And I also wanted to explain the subtleties of Malbec from the different vineyards, the different kinds of soils. But I wanted to, the winemaker that I've been working with for 20 years, he and I wanted to tell a story that would also be fun to read, because I think a lot of wine books are really boring and it's too much technical information. So it's history, it's something about flavor, but it's very playful. So he and I are illustrated going back in time and having conversations. And it's a new kind of book. It's an illustrated mixed with some text, but there's a lot of really also, important information, but there's a lot of this, more easy to read stuff. And it was reviewed in the New York Times, which is a very big deal in the book world. So I was very pleased about that. And it was a bestseller in Argentina. We already ran out of the first edition. It was the first time a wine book was a bestseller in books.
I have to say, I do love the illustrations.
Yeah, it's really good. A mix
Beautiful.
of a mix of photos in there as well. Laura, who's the book for? Who did you want to write this book for?
So I wanted the book to be for people who love wine. Maybe if you're just getting started and if you don't know the difference between Cabernet Sauvignon and Pinot Noir, which is perfectly okay not to know that difference, well, probably you should read, Wine for Dummies first, which is actually a great book, by the way. No, I highly recommend it. I know the authors. It's actually highly technical, a great book. So maybe read first a basic book about wine. But once you already know, okay, I love Sauvignon Blanc, I love Malbec, the varieties, some of the regions, then this book is for you. It will also teach you, how does a producer make decisions during the harvest? Why do you plant a vineyard in one place and not another? And it's written for an audience that should not be expert. So it's written for a wine lover that knows a little more than nothing about wine.
Hey, just got about 30 seconds left here. So if somebody is starting and thinking, okay, let me try a Malbec, what's your guidance for them? Just quickly.
Well, I think the Catena Malbec that you have would be a really good start. But otherwise, I would just go to your local wine store and talk to the person that is at the cashier or on the floor and say, hey, tell me what Malbecs you have, and maybe buy 4 or 5 different ones and compare them, and then see which ones you like. Do you like Uco Valley? Do you like Luján de Cuyo? Do you like Mendoza? Do you like blends with Malbec? So that's what I would do. I would get a couple Malbecs, taste them, and then remember what's on the label and buy more of that. And hopefully buy some Catena Malbec from my family.
Well, I got to say, I know what I'm going to do this weekend. I'm going to have some Malbec, and I'm going to read through your book because it is really stunning. Laura, be well, stay safe. Thank you so much. Laura Catena, Managing Director at Catena Zapato Winery. Her book is Malbec Mon Amour. She said the Times wrote about it. And cheers, kiddo.
Cheers.
We
Happy
did it.
Friday.
Happy Friday. Have a good and safe weekend, everybody. This is Bloomberg.
innovation, money.